Welcome to the deep dive. Today, we're jumping into something really interesting. Japan's whole approach to crypto.
hmm
We're looking at a guide called Japan's Crypto Landscape, Regulations and Opportunities. And it paints this picture, right? A country that's somehow super crypto-friendly and super strict.
Yeah, it seems like a contradiction, doesn't it?
Totally. So our mission for you listening is to kind of unpack that. How does Japan pull off this balancing act between, encouraging innovation, but also having really solid rules for digital money?
And I think what's really useful here for you is that Japan isn't just theory. It's a real-world example playing out right now.
Right.
It shows how carefully built rules can actually create trust, real security,
Mhm.
and a space that often feels a bit chaotic. It's almost like a model.
Okay, so let's get into that puzzle. The source calls Japan one of the most crypto-friendly countries. Now, that phrasing, it sounds a bit off, maybe. We usually hear that heavy regulation kills innovation. So how does the guide explain this? What makes Japan's rules part of the friendliness, not something that stops it?
Well, what's fascinating, and the source really drills down on this, is that the friendliness isn't because they're hands-off. Not at all.
Okay.
It's actually the result of strict rules from their financial services agency, the FSA. They've deliberately put in strong oversight.
So the rules create the friendliness.
Exactly. It's seen as the bedrock for market integrity,
Hmm.
for building confidence so people actually want to participate. It's about creating a stable place for digital assets to grow.
That completely flips the usual narrative, doesn't it? So if strong rules are the foundation, what are the key pieces? What does the guide highlight? I'm thinking like KYC.
Yeah, absolutely.
Ah.
KYC, know your customer, that's non-negotiable for any crypto exchange there.
Mandatory.
Mandatory. And it's not just kicking a box. Their KYC and also their anti-money laundering, the AML rules, they're pretty rigorous.
Right.
The goal is clearly to block shady dealings and protect the average person. So these rules, they have real teeth. They discourage the bad actors.
And it goes beyond just verifying who you are, doesn't it? The guide mentions only approved coins can even be traded. That seems like a big restriction.
It is a significant filter, yeah. The FSA actually vets every single digital asset.
They check them out?
Yeah, they look at the tech, the liquidity, is it likely to be manipulated
Yeah.
before it can get listed on a Japanese exchange.
Okay, so that limits choice, obviously.
It does limit choice compared to, say, more wide-open markets. But the upside is investor protection. It pushes the market towards assets that have, some proven utility or clear operations. Less wild speculation.
Got it. So safer, maybe, but fewer moonshots.
Kind of, yeah. It fosters a more mature environment.
And then there's tax. Always tax. The source says crypto profits are treated as miscellaneous income. What does that actually mean for someone investing in Japan?
Ah, that's a